I haven't done a dividend portfolio update for a while, so I thought I'd have a quick run through it. I use the dividend tracker to track all my stocks in my dividend portfolio. It's pretty good. I've been using it since, when did I sign up? August 22. And it's pretty good because it tracks all your progress. So since then, which it will have started at 16,417. So that's August 22, and we're now almost 2 years later, and it's at 68,000. So it's jumped from 16,000 to 68 in 2 years, which is fantastic progress. You can zoom out for 1 year, 3 months, 1 month, and a week. I've got a yield average from the 27 holdings of 3.5 and yield on cost of 3.9. It updates this every month, but the projected income for this month is $155.14, and projected for the next year is $2,344.84. It's good to see this because every time I add, this goes up, so it's nice to see the progress. So if we have a quick run through the 27 holdings, I'm not going to go into too much detail. You can have a pause or take a screenshot if you want to see all the info. But I have 27 shares in Apple, and it's pretty much at a premium now at $230.54. I've got an average buy price of $138. So you can see that's 67% increase in that, and it's $2,498 kind of profit. Obviously, this is on paper until we sell, but it's difficult to add more when you've only paid this for it. Now, I know over time Apple's going to go up, so it's a case of either hoping that it dips more or, just biting the bullet and dollar cost averaging in. I'm going to still build up, I think, on more positions until this kind of dips. That's what I'm hoping for anyway. You can see the yield is very low at 0.43%, but you're getting all that price appreciation. That's really what you're paying for. The yield on cost is 0.72%. And it makes up 9% of the portfolio, so that's a big chunk, even though it's only actually 27 shares. AbbVie, I've got 9 shares. Similar to Apple, got a nice increase. Nowhere near, but considering what I've invested, it's pretty good. Got an average buy price of $136.53, and it's currently at $170.28. So nice appreciation there. Bank of America, I'm a bit unsure whether to keep this or not. It's been doing okay. Got a nice bit of price appreciation, and the yield's all right at 2.31%. But you can see, based on my yield on cost, it's 3.17%, which is pretty good. Cisco, I'm not too sure again if I'm going to keep this one. These are a couple of ones that I might decide to get rid of and then reinvest the funds into some other positions I want to build on. One of my worst purchases has been Disney. You can see there, only 3 shares. I bought it at, it must be very close to the all-time high. I think it was in the low 180s. So I got it 176.39. This is before I really kind of drilled down into the financials. So it was more like buying it based on a company I knew, really. And then they cut the dividend as well, not shortly after I bought it. I've been holding this just on the basis that hopefully it'll increase in price, increase in value. And with a company like Disney, I think because of COVID and everything, I thought it would do. But it's taken quite a long time. At least they're paying a dividend now, so that is something. Embridge, got 14 shares. Average buy price is $36.10. The stock price really hasn't gone anywhere. But the good thing is the yield is quite high, although I'm not getting much price appreciation. At least I'm getting a decent yield on it. It's another one kind of with these 3 above, which I'll probably won't keep for the long run. Google, this is like a new addition now that it pays a dividend. I've only got 2 shares in this, but this is one that I'd like to add to. Intel, I did sell, I used to have 40 shares. I sold 23 of them after the last run up. I kind of kept some just on the basis that they are building their own chip factories. And I thought there could be a chance that this could shoot up again and then, take some more profits. But we'll see. We'll see. JP Morgan Equity ETF. I can no longer buy this through my UK brokerage because of UK regulations have changed. I'm just holding on to it really now and just taking the dividend. Although I'm actually up at $123.74 because of the exchange rate, I think I'm down about £80. I'm going to have to just keep it basically, just take the dividend. And then when it kind of goes into the green, well, after the exchange rate, I might sell and reinvest. Johnson & Johnson, it's been rocky for the past 2 or 3 years. I think it's going to be okay in the long run, and it's probably going to be one that I'll keep. So I may add to this again if it keeps on dropping. So I think in the long run, it's going to be fine, really. I know there's like the lawsuit, the talc lawsuit kind of hanging over them and a couple of other things. They've got so many products and it is a household name, really, that I think they'll be fine. JP Morgan Chase, this is like out of all the banks, this is the one I want to own. I've really kind of done well as well, over $1,800 up. And I actually bought it at average price of $114.87. It's over 200 now, so that's been a good investment. CocaCola, this is one of the first kind of shares I bought. I've not really added to it in a while, but it's kind of a steady performer, similar to Johnson & Johnson, really. It's one of those stocks that you can just kind of buy and hold forever. Main Street, I really like Main Street, and it's performed really well, and you get the monthly dividend, which is great, and then the special dividends on top. As monthly dividends go, I know we talk about realty income a lot, but Main Street really has been one of the best performers, and definitely with kind of price appreciation as well. You're getting the nice gains on your investment as well as the monthly dividend and the special dividend. Fantastic, really. 3M, another one of those bought in the kind of early days. And yeah, what can we say? Cut the dividend, not being great on stock price. I suppose I've been quite lucky. I paid $129.25. A lot of people have bought this when it was over 200. If they've sold, they've taken a big kind of loss on it. It still pays a dividend, although nowhere near as much. I think it's like kind of less than half now. I'm still going to kind of hold it, gets back in the green here, and then I'll get rid of it. Altria Group, one of these that I'm kind of on the fence with, really. I do like it in terms of the dividend is kind of a priority, and they've said that they want to keep it around 80% cash flow going out for dividends. I'd just like to see them move into other revenue streams. They had like 10% in a beer company. I think it was a bit higher than that. Then they sold it, and I think they're going to sell it again. Edgel, which was a terrible investment. I like to see the cannabis sector that they're investing in kind of take off. I just want to see some other revenue streams to basically encourage me to keep buying it, really investing in the long term, because it is a declining sector. Next up, Microsoft. Absolutely love Microsoft. But again, with kind of Apple, well, better than Apple, really. $453 a share, which is absolutely crazy. I remember when it hit 325, and I thought it was pretty expensive then, but it's an absolute bargain now. Obviously, in hindsight, wish I'd bought more, got an average buy price of $263. I'll just hold this, and what I think will happen is if it gets to the 600, 800s, close to the 1,000, which it could quite easily do over the next couple of years, they'll do a stock split, and I'll just hold it basically. And this will kind of just grow organically. I know not really getting any more shares, but that and the dividend will grow. Basically, I'll hold on to it. And if for some reason there is a big pullback, that's when I'll buy. Realty income, I've got an average buy price of $58.72, which is not great. I've just been basically reinvesting the dividends now. Kind of whatever comes through, I'll buy a couple of shares every couple of months. Pepsi, one of these that I just kind of bought a share off the cuff and I thought I'd build on it. With having CocaCola, I know they've got the snacks in Pepsi. I just don't really feel the need to buy any more of it. Pfizer, I've built it up to 50 shares in this. It's kind of one of those where I know it's going to be fine in the long run. We just need one of their products in the pipeline to take off. I'm concentrating on other positions, especially my Vanguard ETFs, which I'm going to get to. So that's where I'm trying to build these positions up more. And then I might reinvest the dividends possibly from it, but it's not a priority. Procter & Gamble. Now this is another one I do want to build up with. Johnson & Johnson. Same sort of thing. Great products, less lawsuits. That's the big difference. Starbucks. One of those where it's now value territory where you would buy at this price. And I've got an average buy of 110. I could really bring this average down, which I might do. AT&T, this is like another one I'm going to get rid of. I'm not really going to go into that. Just waiting for it to be in the green before I can sell. T Rowe price, really like T Rowe. Got a bit of price appreciation in there and obviously a lower price with an average of 104.39. I want to keep buying this, so when it dips again, I'll keep adding to it. Visa, this is a new one in there. I need to update this because it's over 3 shares now, closer to 4 really, so I need to update that. I'm down at the moment, more than happy to keep buying at these levels. I was buying at high 270s, so more than happy to buy here. Fantastic. I've spoken about Visa a lot. I think its compound annual growth rate's around 15%, so it's really, really high. One of these shares that you can own for the foreseeable future for a number of years. And then finally, my 2 ETFs. So we've got the Vanguard FTSE All World High Yield ETF. It's a bit similar to SCHD, really. I sold out of SCHD a while ago because with regulations, I couldn't buy it anymore. So like this is the UK equivalent. It's got a lot of the similar sort of stocks in the ETF. I've got 103 shares, an average of £50.82, a little bit of price appreciation in there. And then this is the S&P 500 one. So the yield is quite small on this. It's only 0.96%, but you can kind of see how much I've got already. Yeah, the plan is to build on these two quite a lot. And then Verizon, I'm probably going to get rid of Verizon as well. Won't really go into that. Yeah, so that takes care of all 27 there. Bit of progress and going to continue adding to it. Thanks for watching and I'll see you for the next one.